Hello and welcome to this channel. Thank you so much for being here. Recently, we have been getting lots of questions about the US dollar.
This week's price action so far has been rather uneventful. The precious metal is changing hands around $20 an ounce, virtually unchanged from last week's close. A confluence of factors is weighing on gold prices, limiting gains. At the top of the list is the relentless strength of the US dollar. The dollar index is hovering near its highest level in over 2 decades. A strong greenback makes gold more expensive for buyers using other currencies, dampening demand. This week, the index rose above 104. On trade optimism, the market is betting that the worst of the global trade war is behind us and that China will reopen its borders soon. These hopes boosted risk appetite and bolstered the dollar. Traders are reducing their bets on safe haven assets like government bonds and gold in favor of riskier assets like stocks. As a result, gold is down more than 2% in the last 2 days. In these uncertain times, geopolitical tensions and economic sanctions add to the yellow metal's woes. India, the second biggest consumer of gold, has increased import tariffs to 12.5% from 7.5% previously. The move is aimed at checking the current account deficit. It adds to existing headwinds that are already dampening demand. All eyes are now on the FOMC decision scheduled for December. Traders are pricing in a 50 basis point rate hike by the Fed. A larger-than-expected increase could push gold prices lower. Investors are also cautious ahead of the release of US CPI inflation data. Gold is seen as a hedge against inflation. If the data comes in higher than expected, it could boost the dollar and treasury yields, taking gold prices down further. At the same time, the possibility of recession is increasing. U.S. GDP fell at an annualized rate of 3.2% in the third quarter, and the preliminary estimate for the fourth quarter is even worse at 4%. A recession could reduce the demand for gold as economic growth slows down and people lose their jobs. In conclusion, gold prices are under pressure due to a stronger dollar, higher interest rates, geopolitical tensions, and slowing economic growth. The next few days will be crucial for the precious metal. The outcome of the FOMC meeting and U.S. macro data will dictate the short-term direction of gold prices. Will there be a Santa Claus rally in gold prices? Or will the trend of the last few months continue? Only time will tell. We will closely monitor the situation and keep you informed. For more such updates, subscribe to our channel. Gold price struggles this week to break out of a familiar congestion zone.